Hello friends, now we're going to take the topic financial statements. Financial statements. How it should be. So what are the things that are required while preparing financial statements? First, the prime objective of the financial statements is that it should be understandable, because if the financial statements are understandable, then only it is the better way of communicating, because the main objective of the accounting is to communicate with the players which are associated with it. For example, suppliers are there, stakeholders are there, investors are there, customers are there, employees are there. So this information should be understandable to them so that easy communication is possible. Second, relevance should be there in financial statement. Now what is relevance? So relevance, information should be relevant. What? The information should be relevant. If you try to compare, then the information should be relevant. For example, if share price movements are there, share price movements also are volatile, they always change, right? So the relevancy of information should be maintained while preparing the financial statement. Third is reliability. Reliability factor plays very important role, because the information should be reliable, it should be trustworthy. See, the statements which are prepared by CA, authorized by the CA or the auditors, they are presented to banks. On the basis of that balance sheets, the bank give loans. Why the bank give loans? It is completely responsibility and reliability of the certified auditor that he has audited the accounts, and therefore the person is reliable to give loan. So reliability should come. On the basis of that, investments are being made. So it is completely an important factor that reliability should be there. Comparability, it should be easily comparable. How it can be compared with the other companies? For example, if one person is sitting on Bombay Stock Exchange and he is comparing a company called as TCS and Infosys, right? So the balance sheet should be comparable. How it can be comparable? If it is formed by the accounting standards. If the accounting standard which is used, if it is formed according to that, then it is easily comparable. So the comparability, what I was saying, that when a person is on Bombay Stock Exchange and if he is comparing two companies, one is TCS and another is Infosys, he will be comparing on the basis of equity, then he will be comparing on the basis of income, on the basis of assets, on the basis of liability, and on the basis of employee salaries. All the ratios, P2E ratios, many of the things the stakeholder might be comparing with this company. Now how this it will be comparable? If the information is presented according to the accounting standards, then on this both the balance sheets would be comparable. Now the fifth point is material ability. See, the balance sheets are also material. They are materialistic. They can be presented in the form of printouts, or they can be given electronically. They are submitted. There should be no data missing in that, because for example, if the complete balance sheet is made and in the trading part, for example, sundry creditors, you have mentioned 25 lakh rupees, right? But if you don't give differentiation of the values, how this 25 lakh came, you should give the list should be attached to it, a complete detail. Even if the single rupee is given, then the name should come in balance sheet, because the list should be attached to it, and there should be no any suspense values which are quite big, up to, let's understand, 1000 2000, it's okay, but more than 10,000 I think the list should be attached to it. So the balance sheet should be materialistic. This is the fifth point. And there should be completeness in the balance sheet. Data should not be missing, right? If it is balance sheet is not up to date, then what is the use of it, right? So I think these many points are essential while you prepare financial statements. Thank you.